6/7/2020 S&P 100 index weekly chart bull market rally. We have gaps here. These are the top 100 index, 100 stocks, and the S&P 100 stocks. And here is where the pandemic gap down started. We were already overbought within that bull market, but we're going to be coming up and we're going to be hitting major areas. So basically the high was 1515. I will go ahead and update the fact that when we take a look at 91% of the stocks are above the 20-day moving average, 89% of the stocks are above the 50-day moving average, and not only that, that 100-day simple moving average, you got 94% of the stocks above that moving average, which is very bullish, above the 200-day moving average. Now, above the 200-day moving average of the 100 stocks, 64.35% of them are above that 200-day moving average, which is the longer-term moving average in the retail world and how the retail world looks at it. This is in our Panther app, and we are in an overbought S&P 100 weekly index, and we can go higher. But I will tell everybody that we are entering the warning zone is that when we make these highs up in here, and we did, and you take a look at where other highs were, and they were way up here. Okay, and that's what we were showing in there. And that high there on February 17th was 1522 and whatnot. And this weekly high is 1453. And once again, we are on a daily level on an overbought stochastic in the retail world in technical analysis. You're at about 95% K. So that means we can go up to the next resistance area, and it's very possible that we come up here to 1475, and we can. So one of the things that I will say clearly, all eyes will be on those large cap, 100 stocks in the S&P 100 index, and where its bull market rally has happened this year. And now that the pandemic virus is off, and we're at an overbought level. So their Oxy, OXY, and Simon Property SPG were movers in that, and we'll take a look at those. Those are really big speculators off of the bottom that got hammered. But once again, I have updated. I will give all of the resistance levels out. So far, if you look at the 52-week, 1522 was that high that I'm talking about. So we're still minus 4.86% from that level. So all eyes are going to be on the overbought zones and looking at these key indexes, and where we're at is very important when you're doing your option trading and whatnot. And like we're telling people, it's pure mathematics right here on the weekly S&P 100 index, and these diamonds don't lie. And let me tell you, it's pure mathematics at its finest, and it's rolling right here in the S&P 100 weekly index. If we were to come up and fail, then we would look at possibly fading a nice pullback from overbought in the weekly area, particularly on the daily. So we can say that the weighted alpha in this case is plus 14.23%. A 5-day change is plus 58.7%, 58 points, I mean. So that's 4.22% up. And we will just understand the relevancy of overbought, the key leadership stocks, which we have in the index, which ones are overbought and have to come down so that we can buy dips. But we can also use various different put options. Put to call ratio on the S&P 100 index is very mathematically imbalanced. And the more mathematically imbalanced they get, that's about the time the volatility comes back. It's a seasonality period right now. And the date is 6/7/2020, and markets will open up tomorrow. We're going to open up where we close toward these highs, and we're coming up in all warning zones in the bull run. And, there is a lot of concern, and there is. But you go as far as the bull run will go in this environment. And right now, we're going to go up. We're going to hit resistance right in this area on the weekly on the S&P 100 index. We'll look at the leadership. We'll look at buying puts. If the index from overbought has to pull back, big monster bull rally back in play in the S&P 100 index, which is 100 stocks.